Is Chicago market slowing down or are we seeing something much healthier? The August numbers are in and they reinforce the trend we first saw in July. Prices are still climbing, inventory is getting tighter, and the buyers are paying about 99% of the asking price. But transaction activity and market time are essentially unchanged. So this isn't a market that is rapidly accelerating, and the data doesn't point to major slowdown either. Instead, Chicago appears to be settling into a surprisingly stable market. Today I will break down what that means for buyers, sellers and investors, and the one number that I'm watching closely as we move ahead toward fall. So what changed? Median sale price is up 0.5% from July and 4.9% year over year. Prices continue their gradual upward trajectory. July was 4.3% year over year, while August reached 4.9%, suggesting that limited supply continue to support property values. Number of new listings is down 0.7% month over month and 4.2% year over year. New supply remain constrained. This is important because we aren't seeing enough new listings to meaningfully expand buyer choices. Inventory is down 1.8% month over month and 7.1% year over year. This may be the most important number of this month. Inventory was 5.7% year over year in July, and now it's 7.1% below last year, indicating that supply tightened further. Original asking price is up 0.3% month over month and 2.2% year over year. Sellers remain confident, but asking prices aren't accelerating aggressively. That is consistent with a healthy market rather than with overheated one. Number of under contract transactions is down 0.1% month over month and 0.3% year over year. Under contract activity remain essentially flat, down just 0.1% from July and 0.3% year over year, indicating relatively stable buyer activity. Buyers are paying 99.2% of the asking price, which is about 0.5% more compared to the last year. This is an interesting balance. Buyers are paying close to the asking price, but there is still some room for negotiation. Market time is at 50 days, unchanged from July and unchanged from the last year. Another strong indication of market stability. So what does that mean for buyers? August gives buyers interesting combination of competition and opportunity. Inventory is tightening and prices are still appreciating. That makes waiting for significantly lower prices increasingly difficult to justify based on the current data. However, buyers are paying on average 99.2% of the asking price, not 100% or above asking price as we have seen earlier this summer. Strategy for buyers: be ready and move quickly on desirable and correctly priced homes. Don't assume every listing deserves above asking price offer. Look at the properties with the longer market times or recent price adjustment. Negotiate based on individual property rather than overall market. Buyer takeaway: you have negotiation opportunity, but limited inventory means you shouldn't confuse negotiation leverage with the buyer's market. For sellers, the structural environment continued to favor sellers. Inventory is down 7.1% from the last year. Prices are up for 9% and the buyers are paying on average 99% of the asking price. But there is an important distinction between today's market and the aggressive spring market. Buyers are more selective. Strategy for sellers: price according to current comparable sales. Avoid adding a market premium simply because inventory is low. Invest in presentation and marketing. Create competition through correct initial pricing rather than starting high and reducing later. Seller takeaway. Limited supply give you leverage, but the market rewards properly positioned homes, not simply homes for sale. For investors, August continue to support a long-term rather than speculative approach. Prices are appreciating moderately, inventory remain constrained, and transaction activity is stable. These are generally healthier fundamentals than rapid price increases driven by speculation. At this time, investors need to stay disciplined because higher acquisition prices can pressure returns. Investor strategy. Prioritize cash flow and sustainable rental demand. Don't rely solely on future appreciation to make a deal work. Look for the properties where condition, seller motivation, or longer market time creates an opportunity. Maintain discipline when competing for highly desirable assets. Investor takeaway. The fundamentals remain supportive, but the quality of the deal matters more than simply owning more real estate. The bottom line is that Chicago housing market showing stability, not weakness. Prices are up nearly 5% from the last year. Inventory remain limited and the buyer activity holds steady. As we move toward fall, the number I will be watching most closely is inventory. If supply continues tightened while demand remains stable, that could continue supporting home values even as the market enters its traditionally slower season. Whether you're buying, selling, or investing, don't make your decision based on the headlines. Make it based on your goals and the data. If you would like to discuss your next move, reach out to me directly. And don't forget to subscribe so you don't miss the next month's Chicago market update. Thanks for watching.